All right. Let's discuss how to tell when a setup has been invalidated. All right, we're going to use price action that happened earlier on during this session, New York session. So during Asian session and London session, we had price push up and then it reached a high and it rejected and pushed lower. All right, so let's say at that time you entered a sell, right? So let's say you entered a sell. Just when you had an engulfing candle giving you the confirmation, you entered a sell right there, you placed your stop loss above the high as we always do, and let's say for you were targeting for price to push lower, considering that the daily candle closed bearish, right? So if the daily candle closed bearish, there was a chance that price could have been bearish today. However, as you can see, price rejected the low of the range and pushed higher. So let's say you have entered your trade and you're targeting the low, right? The only way that you could have realized that price is actually reversed and is no longer pushing lower is after the next candle closed. So after the next 1 hour candle closed, it closed as a bullish candle. And you can see by the body of this bullish candle that price has bullish pressure. If price was bearish, then we would have seen price closing with a smaller body or even as a bearish candle, but price closed bullish. So this was your first sign that price has reversed. We have now more bullish pressure than bearish pressure. If the candlestick had been smaller, we could have said, oh, possibly price is just trying to create a higher low before it pushes lower. So we could have said maybe price is trying to create a higher low around this area for it to push lower. All right, so that's your first sign. Your second sign and your final confirmation is the next candlestick. So now, as you can see, the next candlestick closed as a strong bullish candle, and this is a 1 hour time frame. All right, so it closed above, or let's say in the range of your sell. All right, so now this is the range this is the reason why you took this trade. You had price bullish, right? Okay, let's remove that. This area right here is the reason why you took the sell, right? Price was bullish, yes. And then we had an indecisive candle, and the next candlestick closed bearish. So you had an indecisive candle, and the next candlestick closed bearish. What is that telling you? That's telling you that bearish pressure has won in the markets. So price is most likely going to fall before it pushes higher again. All right. So that's why you would have entered. So now you having this 1 hour candlestick close as a strong bullish candlestick in that area invalidates the sell. All right, because if price is really that strong, why would price come back? Well, if price was really barely bearish, right, it's pushing for a bearish pressure, why would it push back up back into the range that pushed the sell? All right, so price is reversed and is now setting up a new setup. All right, so sometimes don't hold on to a setup too much. Maybe go somewhere else for 5 minutes, come back and reevaluate, because both situations are correct. It's just that you have to manage the setups with the new information that market is giving you. All right, so what would we expect? What would the next setup be? The next setup would be price pushing higher, because as you can see, price is pushing higher. All the candlesticks have been closing bullish, right? We have this candlestick that is closed bearish. Of course, we have it. That's true. However, price needs to create some bearishness for it to push higher. It's not going to move in a straight line. All right. So if price can respect this law that it has created, we can have price push higher. All right. So we are not saying that price should not fall a bit lower before it pushes higher. No, we're not saying that, right? Price can actually fall before it pushes higher. However, what we want to see is we want to see price coming back and closing above that low. As long as price stays above this low, we can have price push higher and give us that nice setup. So yes, the bearish setup was a good setup for that point. So if you were clever, you would have collected all the way up to the order block. Last bearish candle before price pushed higher. That's your order block. That's where your TP was supposed to be. Aiming for lower, just being greedy. You collect it there, and then you wait for the next setup, and now price is now giving us the next setup. As the next setup we have right now is we need price to respect this law. If price respects that law, then price can push lower. All right, so why are we saying price needs to respect that law? You can see that is the area that price confirmed the reversal. So this candlestick becomes our order block if price is to go higher, because it's the last bearish candle before price reversed, right? We are not, it's not has been confirmed, the impulse has not been confirmed yet. However, if we are going to anticipate price, this is what we've been told so far. So price can dip into this area, however, it needs to respect for it to push higher and hit and give us that impulse and create and continue the trend. All right. So let's start with the questions.